Alright, buckle up, investors. Supermicrocomputer, or SMCI as you know it, is making headlines again. The stock jumped 7% ahead of its earnings report, and the buzz around this company is insane. But let's be real. Is this AI gold rush turning into a value trap? That's the million-dollar question we're tackling today. We've seen this movie before, right? Hype driving stocks to crazy levels, only to crash and burn later. So, is SMCI different? Is it the real deal? Let's dive in. Think of this as the butterfly effect. A seemingly small event, like SMCI's earnings report, can trigger a chain reaction across the entire tech landscape. We're talking about direct impacts, adjacent industry shifts, and even socio-economic consequences. It's all interconnected, and SMCI is right at the heart of it. This isn't just about one company. It's about the future of AI and where the money is flowing. Okay, let's break down the first-order impacts. Obvious one. SMCI stock is going to be a wild ride. Expect major price swings. We're talking a potential 20% move, up or down, after the earnings release. That's not for the faint of heart. Investor sentiment is also heavily influenced. Every news blip, good or bad, directly affects buying and selling pressure. And let's not forget the earnings report itself. It's the moment of truth, folks. The numbers, the guidance, the whole shebang. It's all under the microscope. And here's the elephant in the room, the delisting threat. February 25th is the deadline. If SMCI doesn't file those annual accounts, boom, NASDAQ delisting. That would be a disaster for the stock price. It's a huge risk that can't be ignored. Imagine the chaos, the panic selling. This isn't just about numbers. It's about trust and credibility. Analysts are all over the place on this one. The consensus is a hold, but with a price target suggesting downside risk. That tells you something, right? The experts are uncertain. There's no clear conviction here. Some see massive potential, others are worried about the company's fundamentals. It's a real tug-of-war. Now, let's zoom out and look at the second-order impacts. SMCI's success is NVIDIA's success. The demand for SMCI servers, which often use NVIDIA's chips, reinforces NVIDIA's dominance in the AI hardware space. It's a symbiotic relationship. The whole server manufacturing industry is watching SMCI closely. Their performance validates the demand for specialized servers, especially those built for AI workloads. This is about more than just one company. It's about the entire ecosystem. The AI hardware market is red hot, and SMCI is fueling the fire. Their success incentivizes other companies to jump in, develop similar products, and compete for market share. This is where innovation happens, where new technologies are born. It's a race to build the fastest, most efficient, and most powerful AI servers. The competition is fierce, and the stakes are high. Let's talk about the accounting situation. The switch from Ernst & Young to BDO raises eyebrows. It creates scrutiny around accounting practices within the tech industry. Investors are asking tough questions. What went wrong? Are there any hidden problems? Transparency is key here. The company needs to reassure investors that its financial reporting is rock solid. SMCI's competitors are watching every move. They're analyzing SMCI's strengths and weaknesses, looking for opportunities to capitalize on their mistakes or emulate their successes. This is how the market evolves, how innovation spreads. It's a constant game of cat and mouse, where the players are always trying to outsmart each other. Okay, let's go even bigger. We're talking about the third-order impacts, the socio-economic consequences. Increased availability of AI-optimized servers accelerates the development and adoption of AI technologies across various sectors. Healthcare, finance, transportation. AI is transforming everything. It's a technological revolution, and it's happening right now. The growth in the AI hardware market creates jobs. Manufacturing, engineering, research, sales. All these areas are booming. It's a huge opportunity for skilled workers. But it also raises concerns about job displacement. Will AI create more jobs than it destroys? That's a question we need to address as a society. Competition in the AI hardware space drives innovation. Companies are incentivized to develop faster, more efficient, and more specialized servers. This is how technology advances, how we push the boundaries of what's possible. It's a relentless pursuit of improvement, and it benefits everyone in the long run. Successful AI adoption can lead to increased productivity, efficiency, and innovation across the economy. This translates to economic growth, higher standards of living, and a better future for all. But it's not a guaranteed outcome. We need to make sure that the benefits of AI are shared equitably and that we mitigate the risks. SMCI's story, Both its potential and its challenges can impact overall investor confidence in the tech sector. A successful turnaround could boost confidence, while a failure could create caution. Investors are watching closely, trying to gauge the long-term prospects of the AI market. It's a delicate balance between optimism and skepticism. Accounting irregularities and the delisting threat can lead to increased regulatory scrutiny of other companies, particularly those experiencing rapid growth or operating in emerging markets. Regulators are cracking down on companies that aren't playing by the rules. Transparency and accountability are becoming increasingly important. Let's talk risks. The biggest, most immediate risk is the delisting threat. February 25th. That's the deadline. No excuses. If SMCI misses that deadline, the stock is going to take a serious hit. It's a binary event. Either they file or they don't. There's no middle ground. This is a critical risk that investors need to be aware of. The resignation of Ernst & Young as auditor, citing concerns about flaws in financial reporting, is a huge red flag. While an internal investigation found no evidence of fraud, the issue is still unresolved. This casts a shadow over the company's financial integrity. Investors need to demand answers and hold the company accountable. Expect high volatility. The potential for a 20% price swing after earnings is a clear indication of the risk involved. This is not a stock for risk-averse investors. You need to have a strong stomach to handle the ups and downs. Be prepared for a roller coaster ride. Analyst price targets suggest a significant downside risk. That means the stock may be overvalued, or that analysts have concerns about its future performance. Don't ignore these warnings. Do your own research and make sure you understand the risks before investing. SMCI's success is heavily reliant on the continued growth of the AI market and its partnership with NVIDIA. Any slowdown in the AI market or a disruption in the NVIDIA relationship could negatively impact SMCI. This is a concentration risk. The company needs to diversify its revenue streams and reduce its reliance on external factors. SMCI operates in a highly competitive AI landscape. This means that the company faces pressure from other players in the market, and its success depends on its ability to innovate and maintain its competitive edge. The competition is fierce, and the margins are likely to be thin. It's a constant battle for market share. The reference to a past critical short seller report is a reminder that the company has been targeted by short sellers who believe that the stock is overvalued or that the company has underlying problems. While these reports should be taken with a grain of salt, they can still have a significant impact on investor sentiment. The switch from Ernst & Young to BDO as auditor introduces potential operational risks related to the transition and ensuring a smooth audit process. This is a critical transition that needs to be handled carefully. The company needs to ensure that the new auditor has a thorough understanding of its business and its financial reporting practices. So, what's the verdict? Is SMCI AI gold or a value trap? The answer is, it's complicated. There's definitely potential here, but there are also significant risks. The delisting threat, the accounting issues, the high volatility, these are all red flags that investors need to be aware of. Do your due diligence, understand the risks, and invest accordingly. This is not a stock for beginners. It's a high-risk, high-reward play that requires careful analysis and a strong stomach. When the earnings report comes out, here's what you need to watch for: revenue growth, profit margins, guidance for the next quarter, and any updates on the accounting situation. Pay close attention to the details. The devil is in the details. And listen carefully to the management's comments on the conference call. They'll provide valuable insights into the company's future prospects. The SMCI story is a microcosm of the broader trends and challenges within the tech sector, particularly related to AI, rapid growth, and regulatory compliance. Stay informed, do your research, and invest wisely. The AI revolution is happening, and it's creating incredible opportunities, but it's also creating risks. Be prepared, be informed, and be cautious. And as always, good luck with your investing.